Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Analyst at GDMFX. Welcome to our morning outlook. Starting with Australia, the Australia's dollar held losses after China's PMI fell to 51.1 in August from 51.7 in July, according to the National Bureau of Statistics and China Federation of Logistics and Purchasing. Now, home prices across Australia's states and territory capitals recorded the biggest winter gain since 2007. The Reserve Bank of Australia actually meets tomorrow. Also, the Aussie was little changed this morning at 93.4 US cents after falling 0.2% at the end of last week. Going to Europe, the euro held losses also against its 16 major peers from last month after completing a 7-week slide, the longest stretch of course in more than a decade. A manufacturing index today may add to the case for the European Central Bank to expand stimulus. However, the demand for the euro was limited after the pro-Russian rebels attacked two Ukrainian Coast Guard vessels for the first time, just hours after European Union governments agreed to impose new sanctions on Russia if the conflict worsens. Now, fighting in the southeast Ukraine continued yesterday, and the situation there remains tense. The dollar was little changed at 1.3128 per euro from August 29 last week, after earlier touching 1.3119, the strongest since September 6. The euro declined 0.8% last week in the longest stretch of losses since December 1999. It is expected that the euro may fall towards the level of $1.3 per euro this week and find support around that same level. The British pound held is going up versus the US dollar, passing through the 1.6613 resistance level. Right now is at $1.6634 per pound. The next target is seen as around 1.6680 in today's trading day. And we're expecting, of course, the market manufacturing PMI in less than 15 minutes. So keep an eye on that, all traders and investors. Let's take a brief glance at the commodity sector. We're looking there at hedge funds cutting their bullish gold bets for the fourth week in 5, sending holdings to a 2-month low. As of course the US government data show, open interest in New York futures is the smallest in 5 years right now, and assets in global exchange traded products backed by the metal in August posted the biggest monthly drop since May. However, the prices are holding in a sideways range right now at the price of $12.89. As we know, today is a Labor Day in US. We're awaiting the non-farm payrolls and unemployment rate this Friday at the end of the week. Till then, the prices are seen fluctuating in a sideways range again. West Texas Intermediate fall last month, snapping the longest rising streak since February, as OPEC's oil production was seen increasing to the highest level in a year. Now, the price managed, however, to break through the upper level of the sideways range, and in the short term, we might see a retest of the level of 97.05, which is the 33% retracement on the Fibonacci. This is seen on a 4-hour chart. That's all for me from today. Thanks a lot for watching. Keep a close eye on the economic calendar. It's a very important week. Thanks everyone. Bye-bye.